The secret manipulation of gold goes much deeper, and it's much worse than you think. Now, while recent news headlines were made when America's largest bank, JPM, was slapped with almost a $1 billion fine for manipulating gold markets, it actually pales in comparison to the secret manipulation being done by the government over the last 100 years. Now, in this video, I'm going to explain the secret manipulation being done. I'm going to explain how it works, what this means for our dollars, gold, and other alternative assets, what the potential outcome is, and what we should be doing about it right now. So stay tuned. All right, welcome back. If you're new to the channel, my name is Mark Moss. Now, unless you've been living under a rock, you already know that every market and every asset is manipulated. Now, I hear complaints when I talk about Bitcoin that isn't Bitcoin manipulated. It's manipulated by whales. And I say, well, aren't we watching the Fed inject trillions of dollars into the stock markets to prop them up at the same time? So obviously they're manipulated. And, you know, for gold bugs out there, I'm sure you've seen, as I mentioned in the beginning, the news that JP Morgan's been manipulating gold using something known as spoofing. Spoofing is basically where traders place options orders without ever plans to really execute on them. So they place big buys or big sells to move the market. So it appears that the stock or a financial instrument may move, but they never really plan on doing anything about it. So they're just manipulating it that way. And that's what happened. Now, according to the enforcement action from the CFTC, the JP Morgan traders acted with the intent to manipulate market prices, and ultimately they did. They caused artificial prices, and so they had to settle the case. Like I said, it was about a $1 billion fine. So now we know that everything is manipulated. Every asset, every market is manipulated. But what most don't know is that the US government is really the entity doing the most manipulation. Not just of gold, not just of the markets, but of everything. And it even has policies and funds set up to do just that. Now, while this is a secret from most people these days, it's fully sanctioned and it's fully legal as per US law. So why is it being manipulated? Well, of course, it's being manipulated to trick people into sticking with fake fiat currency that the Fed's been printing. Now, it started all the way back in 1933 when President Franklin D. Roosevelt signed Executive Order 6102. I'm sure most people, if you're gold bugs, you know about this one already, which basically made it illegal for US citizens to own gold. Now, the stated reason for the order, the stated reason they gave everybody was that, hard times had caused people to hoard gold. And this was because people were hoarding gold, it was causing economic growth to stall out. It was making the Great Depression worse and worse. Of course, that wasn't the real reason. The main rationale behind the order was actually to remove the constraints on the Federal Reserve that was preventing them from being able to increase the money supply. Now, I guess it actually started a little bit previous to that because per the Federal Reserve Banking Act of 1913, the Fed was required to hold a minimum of 40% gold in order to back the amount of currency that they are creating and that they are issuing. But what happened is by the late 1920s, the Federal Reserve was pretty much maxed out. They had printed so much money, so much fiat currency that they hit the limit on the amount of money they were able to create because they didn't have enough gold. And so what they had to do is then they needed to get more gold, which of course led to the executive order where they basically forced U.S. citizens to turn in their gold for an exchange rate of $20.67 per ounce. And then once the government seized all the gold, once they had taken it all, they revalued it. Instead of being worth $20 per ounce, it was now $35 per ounce, which of course made the government a lot of money. It made the people pretty poor because now they were left with the money that had lost about 40% of its power. But of course, the government made a ton of money about this. Now, you probably already know this story, and the point of this video is not to talk about that story, but rather the secret fund, the secret operation that started because of this that most people don't know. So what happened is once the government revalued the currency from $20 to $35, of course, they made huge profit, right? Like I said. Now, what they did with those profits is that they created a secret fund. And this was established by the 1934 Gold Act. So it's not so secret, just most people don't know about it. But this secret fund, it's called the Exchange Stabilization Fund. And of course, what is the purpose of this new Exchange Stabilization Fund, or we'll call it the ESF for short? Well, Unlike most government policies that we see today, today we see government policies that typically mean the opposite of what it says. So it sounds like something really good, but it's something really bad. In the case of this fund, the ESF, it's kind of exactly what it sounds like. So it's to stabilize the exchanges of the dollar to other currencies, including both gold and to other global currencies. Now, per the US Treasury Department website, the ESF began to conduct foreign exchange market intervention and transactions in 1934 and 1935. Also, it entered into credit arrangements starting in 1936. From 1936 to the present, the ESF has participated in over 100 creditor loan arrangements with foreign governments or central banks. Now, after World War II, the ESF conducted treasuries, monetary gold transactions, and widened its participation in credit arrangements. So what this means is the fund was set up to intervene. That's what they say, right? It's set up to intervene. Of course, if we put that another way, that means that they was set up to manipulate the prices of other foreign governments and central banks. And they had to start doing this right away because after they seized the gold and then they revalued it, they needed a way to persuade, to say it lightly, to convince people and governments and central banks to hold on to this new US dollar instead of just rushing right back into gold. So they were left with dollars, which just lost its value, while gold went up in value. And of course, why wouldn't everybody want to rush back? And so they had to intervene. So they took that slush fund and just went to work and started manipulating markets to cause people to stay in as best they could. Because like I said, everybody wanted to jump in. Now, fast forwarding through time, the ESF continued to manipulate the price of gold and foreign currencies to encourage the use and the participation of gold. But as the US continued to print more and more and more dollars, even with the manipulation, the governments and the central banks knew that the dollar was becoming worthless. And they started to demand to convert those dollars back into gold. And of course, they wanted to do that in a big way. And so the ESF was kicking into really high gear, starting to manipulate markets. And they were, working to prevent the outflow, right? And now if we go back to the Treasury website, we can see more evidence. Quoting, it says, Treasury policy during 1961 to 1971 period focused on deterring capital outflows from the United States and giving major foreign central banks an incentive to hold dollar reserves rather than demand gold from the US gold stock. So it says it right there. That's exactly what they were doing, trying to deter governments from coming to get their gold. Now, the ESF resumed intervention operations in the foreign exchange market in March of 1961 for the first time since about the mid-1930s, but it soon became apparent that the resources of the ESF alone were going to be too small to sustain transactions that were necessary. So basically what this means is that the ESF was too small for the big problem that they had. And so to offset, what the Fed had done with the money printing, they needed to bring in more backup. So back to quoting from the Treasury again, it says that at the invitation of the Treasury, the Federal Reserve joined in the foreign exchange operations in February of 1962. The Federal Reserve entered into a network of swap agreements with other central banks in order to obtain foreign currencies for short-term periods for use in absorbing forward sales of dollars by foreign central banks, which were hedging exchange risk on their dollar holdings. So basically, the dollars had been printed so much and there was so much demand to try to get the gold that the ESF alone wasn't even able to manipulate the market enough, and they had to get the Federal Reserve to come in and help out. Now, finally, that even wasn't enough. So finally, in August of 1971, the US, under President Richard Nixon, just said, enough. We're closing the gold window. We're no longer going to allow conversion of dollars into gold anymore. Basically, at that point, what it means is that the US government defaulted. But this didn't mean that the ESF stopped manipulating markets. Oh, no. They still have a lot of work to do. Now, I'm not going to go through all the manipulation that's happened, but I'll just rattle off a couple of big ones. So in 1978, this is a pretty big one. 1978, the ESF entered into a $1 billion swap agreement with the Bundesbank, and they did that to support the dollar when no one had any confidence in the dollar anymore. I mean, why would they? The US just defaulted and said, basically, you can't get gold anymore. And so, of course, confidence was lost, and so no one had confidence. And so what did they do? Well, what happened is the US had to issue what was known as Carter bonds. And the thing with the Carter bonds is that it was basically, debt obligation, but instead of being backed by dollars, it was actually backed by Swiss and German currency. That's how bad the confidence was. Then in the mid-1980s, the G5, which are the top 5 biggest countries, they entered into an agreement called the Plaza Agreement, once again setting exchange rates. And then later with the Louvre Accord and the G7, more interventions came in the mid-90s, again in 2000. And so the ESF basically has just been manipulating markets, and they carried out major manipulation through the exchange of currencies with other foreign governments. So what does all this mean, and why do we care, right? I mean, it's obvious that the government doesn't want to see the gold's price rise too much. I mean, it can't allow it to look too attractive because gold and the US dollar are basically their competing currencies. Which one are the people going to hold, right? So the more that gold rises, the worse the dollar looks. Now, the US government has understood this all the way back since 1934 under the Gold Reserve Act. Now, like I said, that Gold Reserve Act specifically authorizes the government to manipulate gold prices and currency exchange rates. So going back to where I started with JP Morgan, then why would the government go after JP Morgan for manipulating gold and currencies when they're doing the same thing actively, openly, right? Well, there's 2 possible scenarios, or really one, but maybe with 2 different outcomes. Well, of course, the government hates competition, so there's that one. But there's 2 possible scenarios, really one with, like I said, 2 different outcomes. So we know that the Federal Reserve has to inflate, right? They have to continue to inflate the currency or die, which is why, they're continuing to push this narrative that there's no inflation. They need to get 2%. They can't get 2%. They have to keep trying to push and push and push. And they have to keep trying to stimulate to get this inflation. We have to keep printing more money and inject more liquidity and all these different things to get that inflation because the dollar's value is depreciating and they need to fight against that. Now, the dilemma for the Fed and the US government is how do they keep people the victims of a depreciating dollar? When your dollar's losing purchasing power, why would you hold it? How do you get stuck in that trap? Now, a rising gold price, of course, would warn the victims to get away from that trap, which means getting out of dollars and into gold or other assets like Bitcoin. So they will do all they can to force or persuade or manipulate people to hold and to use dollars, but this has fallen apart pretty quickly. Now, we've already seen central banks all around the world. They've been accumulating more gold the past few years than any time in history since 1971 when that gold window closed. And as I've been reporting already, China, Russia, Turkey, Iran, and others, they're all de-dollarizing and they're moving to other currencies or gold for their own trade agreements and their oil transactions. So while the US, the Fed, and the ESF are trying to manipulate the markets, to keep the dollar more attractive and alternative choices like gold look weak, they might also at the same time be planning another 1933 style takeover. Basically the 1933 style takeover and then leading into a repricing event. Like I said, like they did in 1933, right? They took it back at 20 and then instantly made gold worth $35. So they could be suppressing the price of gold to accumulate at lower levels before finally announcing a repricing of gold, making it worth double, triple, or even more, something like that. Now, this is something Jim Rickards, he's been talking about. He's been basically predicting that we'll have a gold price of $15,000 by the year 2025. It's 5 years from now. And the reason why it would rise that much is because it would be repriced in gold. Now, I did a video on this. You can see the link up here. And I talked about how gold could get to 50,000. And again, it's based off of it being repriced, based off the amount of currency that's in the world and the amount of gold that's in the world, and then dividing it by what percentage you want it to be backed. But either way, regardless of what the outcome is, we know that the U.S. is actively manipulating the price down and the U.S. value to keep you and I trapped into using the currency, of course, until it's too late, just like what happened in 1933. Now, if you want to protect yourself before it happens, before you lose 40% of your purchasing power overnight, like what happened to all the Americans back in 1933, then you got to act before it happens. You got to start acting right now. You got to follow the lead of China, Russia, and the other central banks. I mean, if they're doing it, it's a pretty good sign that we should too. Now, let me know what you think about this. Do you think it's possible that they're manipulating the prices just to keep us forced in? Or is it possible that they might even be trying to accumulate more so that they can revalue gold? Leave me a comment down below. Let me know what your thoughts are. Of course, give me a thumbs up on this video if you like it. If you don't like the video, that's okay. Give me a thumbs down. Let me know why in the comments down below. I try to answer as many of them as I can. And that's all I got for you today. To your success, I'm out.